You just saved your first $5,000. You feel incredible. Then someone at work tells you about this crypto thing. Your friend won't shut up about stocks. Your uncle swears real estate is the way. And suddenly you're paralyzed. You've got money but no idea where to put it. What if I told you successful investors don't jump around? They climb a specific ladder. And if you skip a step, you'll probably lose everything.
My name is Gary, and I spend way too much time thinking about why new investors blow up their money.
If you're someone who finally saved some cash and wants to invest it, but you're confused about where to start, make sure you hit that subscribe button. And if this helps you avoid losing money, drop a thumbs up.
Here's the thing. Most people don't fail because they're dumb. They fail because they skip steps. They try to run before they can walk.
Before we start, I put together a free PDF called The Money Leaks Checklist, 𝙁𝙍𝙀𝙀 2025 edition. It breaks down the 10 biggest places people lose money without realizing it, and how you can plug those leaks today. If you want to stop wasting cash and redirect it into savings or investments, grab it free. The link is in the description and pinned comment. Download it now. It takes 10 seconds, and at Pulling Glancer persuades it. And it might be the most profitable thing you do today. Now, back to our main video.
Look, here's what's crazy. The average person doesn't even have an emergency fund. No backup plan. Zero. But somehow they're ready to throw money into the stock market. According to Bankrate, 56% of Americans don't have enough savings to cover a $1,000 emergency. 56%. And these same people are opening Robinhood accounts and YOLOing into random stocks. Here's what most people don't realize. The richest investors in the world didn't get rich by skipping steps. They climbed a ladder. Phase 1, Phase 2, Phase 3. That's it. And if you follow this, you're not going to panic sell when markets drop because you'll have a safety net underneath you. Phase 1 is boring. It's unglamorous. It's exactly what you don't want to hear. But it's non-negotiable. This is your emergency fund. Remember that 15-65-20 rule? The 15% goes here first. You build a $5,000 to $10,000 cushion. This isn't investing. This is survival. This is saying, if my car breaks down, if I lose my job, I don't have to panic. Here's the psychology. Once you have this, your brain stops freaking out. You can actually think clearly about money. You won't make desperate decisions. Now you might be thinking, Gary, that's not investing. That's just sitting in a savings account. Exactly, that's the point. Phase 1 isn't about making money. It's about not losing money. Once you've got that $10,000 safety net sitting there, now we can talk about actual investing. Phase 2 is where your 15% savings starts going into index funds, ETFs, maybe some dividend stocks. This is boring wealth building. Not flashy, not exciting. But here's where it gets really interesting. If you put $500 a month into index funds for 20 years, you're looking at over $200,000. Just from discipline. Why? Because you're not gambling anymore. You're following a system. You're not checking your phone every 5 minutes. You're just contributing and letting compound interest do the work. This is what separates millionaires from broke people. Not intelligence, patience. Phase 3 only happens after you've crushed phases 1 and 2. This is individual stocks, real estate, side businesses, crypto if you want, the higher risk stuff. But here's the thing. By the time you get here, you've already got $10,000 in emergency savings and you're investing consistently. You can afford to lose. You're not betting your survival on it. This is what the 1% does differently. They don't skip, they climb.
So here's your move. Figure out which phase you're in right now. Are you phase 1? Build that emergency fund.
Phase 2, start those boring index funds. Phase 3, you already know what to do. Don't skip ahead. Don't get tempted. Just climb.
Subscribe, drop a thumbs up, and comment, which phase are you starting today? Let's build this right.